Hello, hello, and welcome to the Wealth Wisdom Financial YouTube channel podcast, all things awesome. I'm super excited about my guest today, Mehak Begemann. She is a CPA, a real estate investor, and a fractional CFO, Chief Financial Officer. And I'm really excited, all those hats that she wears, and how she also is a big fan of Profit First, like us too. So I'm really excited about digging in a little bit to how Profit First connects with real estate, but also if Mehek's okay with sharing a little bit of her story as a woman and a person of color in this industry. I'm always excited about how that has been
This.
brought into the world here and what that looks like for her. So back us up a little bit. Tell us a little bit about what brought you to becoming a CPA, getting excited about real estate and Profit First. And thanks for being here.
Awesome. Well, thanks for having me. Thanks for having me here and excited to be here to talk about all things real estate and profit first. I think that something clicked when I started looking into real estate from the lens of an investor myself, and sort of this idea of, working your day job, working your business, and how do you get out of working at five to produce active income, right? So most people look at real estate as a passive investment. However, those of us who are in real estate know it's not entirely passive. So it really got me started on as an investor, how I look at deals myself, and then brought in a slew of clients who are more than an investor. They're a dealer, they're a broker, they're either running a brokerage or they're flipping several houses a year, or they have some and so many times it's crossover. You might start out as a wholesaler or flipper, and then you have a rental portfolio. You have an active trade or business, and then you have some passive investing. So you see these crossovers. Um,
Mhm.
so the one thing I saw in my client base was, even though there was amounts of influx of cash and revenue into the businesses, the owners of the business are still living deal to deal. And so they come in with this pain point of, man, look at my top line. We did so good, and I'm still feeling so stressed about my cash position. And so, how do you marry this idea of passive real estate investing or passive income to truly how, as owners, how we feel that some of it is automated and actually is passive, even if it's not today, but in 10 years, that I want to maybe bring in a manager into my business or some structure of an exit strategy at a high level. So I think we start out with the right mindset and then get bogged down by the day to day and the weeds in the business as far as just running it. So
Mhm.
I see that in my client base, and it's a good problem to solve with my expertise. It fits right in. I have a heart for real estate because I'm an investor myself. So it's just sort of the perfect mix, and it sparks something in myself because so far I was serving clients that were large, very massive companies, and now I'm serving a smaller clients. I see a direct impact of what my services can do for owners directly. So that really drives a lot of my passion towards what I'm currently doing in my business.
Great. Thanks for sharing that. It kind of, a lot of people like they're working their corporate job, they're doing their W-2 and they're living paycheck to paycheck, and then they expect when they switch, build up this real estate empire, maybe even build enough cash flow to leave that job and just do real estate, that thing it's going to magically solve everything. And yet they're still living deal to deal and it still feels the same as paycheck to paycheck. And that's why I love that we both have an emphasis on cash flow management, and there's a lot from personal finance as well as business finance and real estate that can help us break that cycle of deal to deal or paycheck to paycheck. It's actually the same kind of principles that are working there. What have you found to be most successful in kind of first priorities when it comes to somebody saying, okay, I'm making this work, but it's not working for me. What do I do first?
I think the first thing is just a money mindset shift. And so oftentimes, even though I'm advising on their business side of financials, a lot of it, the money has to mimic your underlying belief of how it works, right? Like, so I have clients who will oversaturate some of their funding in their profit first accounts, 6 months of OpEx. Well, maybe they only need 3 months of OpEx because they do have sufficient deal flow. And then I have others who are always looking at the bright side of like, oh, I got these deals in the pipeline. They're always looking on the bright side. So it's like you have to somehow land in the middle and say, take the rose tinted glasses off. You have great deal flow, but let's look at our conversion rates. So oftentimes I'm having some difficult conversations, but really it is to plan for success in terms of the market is changing right now. So if you think it's going to take 90 days, let's add another 60 because chances are inventory is going to sit on the market for longer than what you were anticipating it to. And now you've got a 60-day cash flow crunch situation that is stressing you out. So I think it really is mindset. I've got the optimistic flipper, and then I've got, I think most real estate investors, we look at the upside, which is what makes real estate so fun and successful as an investment choice. So I think that definitely the personal money mindset of, oh, this business doesn't have to pay me anything today. Oh, this is for the long haul. I would disagree. I would say that from day one, you should be profitable. You might have a seasoning period where you are investing in your first store because we know how hard it is to get your first store under your belt. So there might be, a year or two where you're funding it with your W-2 or funding it with your business. But at some point in the very near future, this rentals should be cash flowing, at least cash flowing themselves, even if there's no access. So you just have to, you might be in that deal and you may have bought it wrong. It's hard to take the hit and say, you know what, I bought this wrong, or whatever the case is in a given situation, or maybe you made a wrong hire in your business. So, but you got to stop the bleed because
Mhm.
it keeps on going the way it's going. And then there's this pressure that you feel as an owner.
Yeah. Kinda reminds me of, I think at the very end of chapter 1 of the Profit First book by Mike Michalowicz, he invites everyone, "Draw a line in the sand. Your business will be profitable from this point forward. I'm gonna show you how." And what you're basically is saying, let's draw the line, and then you work with them to figure out, okay, what are the expectations that need to change going forward? And, that could be how long a deal takes, or it could be how much contingency funds do I really need, those kind of things. One pushback I get a lot from real estate investors is that their OpEx is actually pretty low, and they feel like they have a lot of profit and they wanna just push it all back into the business to keep it growing. What would you say to that?
Yes. So I can think of one particular investor. He is doing between 5 and 6 million of top line revenue at this time and taking home not even 5% of it.
Mm,
And so the argument I hear is, well, I got to keep growing this. I got to keep, building this machine. And I understand. However, I would argue that from a point of starvation, like when the owner is starved, there is not growth happening. The owner, get to dictate what is a reasonable compensation. And this is not a tax term, just generally speaking, as far as what your take home pay needs to be to support your lifestyle, and you'll be the first to take a pay cut in a down market. So most owners are not taking enough, in my opinion, in terms of distributions and profit share as with profit first. If you remember from the 5 accounts, like you should be funding a profit account that should be liquidating every quarter.
mhm,
And so the methodology I'm teaching is, hey, you're going to be all right as far as fund the account. You're not starving your business. And I think sometimes, and all the entrepreneurs in the room will understand, sometimes you feel very alone in some of these conversations. They're all in your head. You think you're going to be okay, but you're trying to think through it with numbers on a spreadsheet, five spreadsheets, whatever it takes. And I think sometimes you just need somebody else to take a look at your numbers and say, you're going to be okay. You have enough reserves. Or the other side of it, it's like, no, you need to really beef up your reserves. So it's almost a sounding board type of relationship where you're still in charge of making all the decisions on your business, but now you've got somebody to bounce things off of as an advisor to say, hey, am I thinking about this correctly? But I do get pushback on the reinvesting in the business, to which I do push back hard and say you cannot operate from famine. You have to get to a point where you're comfortable, your bills are taken care of, and all cash needs of the business are met. Now you know how much free cash is left in the business for you to go after that next acquisition. And if there's not, then you have options with private money or whatever other source of of capital and or borrowed funds that you can access.
Yeah.
So sometimes deal flow really overshadows the current cash position of the business because on one hand, you're just going to keep on growing at the expense of, just not being able to have even 1 month of OpEx. So not really a good place to be, especially if you're actively flipping, because as you know, the cost of rehab is high.
Mhm.
So your cash needs are constantly shifting, and it's hard to know how much of the cash in one account is actually mine, how much is just pass through revenue in the business. So I do get a lot of pushback on that though.
Yeah, and I heard a couple of things there, personal self-care, making sure the owner's not starved. Because when we're operating from a famine, we're gonna operate very differently than when we're operating from surplus. And then I heard the just knowing how the money is moving is a big, empowerment tool to know what is really happening, and that awareness can bring a lot. And then probably the most important is the sounding board, the person you can talk to, and that's really where a CFO type, relationship can happen. Now I'm gonna ask you to switch hats. The other pushback I get is, "Well, I can't take money, I need to reinvest it because I don't want the Internal Revenue Service to take a portion of what I'm gonna pay myself. I wanna keep my taxes super low, so I'm reinvesting. I'm continuing to build, build, build. I can't show a profit because then I have to pay taxes." If I can ask you to put your CPA hat on for a second, how do you respond to that, generally speaking?
Yeah, so you need a good tax advisor who's a tax planner, not a preparer.
Yes.
Because if you're talking to some February of 2023, you were talking strategy for the current year. I just have had so many calls with my clients just this in Q1 because my big push is when you come to me on 12/31 of 2023, there is not much we can do. It's just the truth of the matter. Now, real estate is a very tax favorable methodology of investing. So there are things available after the fact, after the tax year ends, if certain things are in place to be able to avoid taxes altogether. But I think a lot of times my flipping clients and my wholesale clients that bring in what is called ordinary income are going to have exposure from a tax standpoint. But really, I always say tax is a tail of the dog. So if you're looking at acquiring funding and continuing to grow your business, then you really don't want to show losses. And really, honestly, let's pay our fair share of taxes for what is due and do some really good tax planning to avoid taxes or minimize taxes wherever possible. So it really just comes down to strategy. However, I think most of the times our heads are in our business. We are so bogged down that we're not even thinking about strategy. We're trying, the deal to deal. So again, going back to if you have sufficient reserves, you have reserve for taxes, you can write yourself a check out of it. If it's a refund, you can write yourself a refund check because you reserve for taxes. But when you have sufficient in the business and you're not chasing every single because you got to pay that bill, you have time to think about strategy, which is the same mindset of let's operate from the a surplus because then our minds are they're sound in terms of let's take a step back and look at the overall strategy for the business and taxes one prong of it.
Yeah, I love that, and especially because it's not gonna just save us taxes short term, this year. It's gonna take that long-term tax perspective, so we're not surprised with the big tax bill when we're 60 or 72, but we're spreading them out, getting them done, because we're having a true strategy, not just, deferring them into the long term. Love that. What do you find is a hang up that somebody gets from real estate? I've get and profit first and all of that. I've mentioned a few of them. What's one that you might find surprising or that most people might not think of, but you encounter regularly?
Yeah, so the one pushback that surprises me all the time is I don't want to open up bank accounts. That is my most common push on profit first. And I think a lot of times it comes from a place of I have to manage those 30 accounts. And a lot of times owners are already moving cash around between accounts. So this adds more anxiety to their plate where it's like, I don't want to have managed another 6 accounts. And so it's winding the conversation to say, I'm not adding more to your plate. We're going to be strategic in how cash is flowing through the business. The point of this is to minimize the amount of cash transfers either between businesses or between accounts because we're proactively funding them. So I do get some pushback, but as you know now, we have several partners as far as banking partners that allow for the sub accounts to show in a manner that doesn't actually create these additional debit cards and accounts and so on and so forth. It is geared towards more the profit first mentality. So it's a small hang up, but a lot of folks come to the table just so like defensive about, I don't want to manage another, because if you have five entities, that's 15 account, 25
Mhm.
accounts, depending on how cash flows through the business. So that is one that I see. And then others I see, they say, well, I already know what's going on in my business. I already know. And as you peel the onion back a bit, it's like, well, do you know your margins? Like, do you know how long your inventory is sitting on the market? From the time that it's in on your balance sheet to the time that cash hits the bank. Oftentimes, those answers are they're muddy waters because of either transaction volume or delayed closings or not having current data. Same with the rental portfolios too. Sometimes we funded with a W repair or whatever the case is, and we're not looking at an annual basis to say, is this really cash flowing? And if it's not, it's okay because a lot of times we hold rental real estate for future cash flow, and that's okay. But you need to know how much you need to fund it every year if it's coming out of pocket. So oftentimes I get the overconfident investor who are like, I underwrote this deal well, but they haven't reevaluated those deals 2, 3 years in, with some of the either rents have gone up or the property needs some like rehab, whatever the case is. So oftentimes I just feel like the financials are not really tied in to be able to draw meaningful conclusions from that data.
Yeah. Okay, that makes a lot of sense. Thanks for sharing that. It's kind of people buy things, they hold on to them, but they forget to reevaluate and make sure that it's worth keeping. Same with all the bank accounts. Now that there's new banks that are offering the sub accounts without actually having different accounts, maybe it's time to switch banks. And that's something worth exploring. And we need a good partner to do that with us. I probably get asked the most since I am not a CPA or an enrolled agent. I cannot give tax advice. I get asked very often for referrals to tax professionals that can file, but all strategize and give real tax advice and answer real questions. I'd love to hear a little bit about because I before people start reaching out to you, give us the what's it like to work with Mahak and what happens and what does that look like so they might know if you're a good fit for them.
Yeah. So the investor that I'm serving at this time is your small to mid-sized investor, and that's really the relationship that I love because a lot of times a lot of these folks have a few rentals, or they may have one or two flip entities. They're flipping some homes, they're doing some wholesale, and it is just all kind of going on to their personal return. And they want to, they understand underwriting and they understand deal flow. But then there's like, here's all my stuff for taxes. There's just no conversation about it. So with me, what you get is a lot of education and a lot of conversation. So there is more of a personal touch with me and my team in the investors that we are currently serving, primarily because I want to understand how to do a situation. It's like I'm not just like, okay, here you go, figure it out. You do so much work in buying the right deal, operating your business, and then I want you to understand how it impacts your tax return, how it impacts your taxes, how tax planning works. So I definitely would say that you get more touch with my business and how we operate with our client base. You also just get more airtime. So we do a value-based billing as opposed to an hourly billing. Because what I've found is that clients don't really want to pick up the phone and call their attorney and pick up the phone and call their CPA because they're like, I'll just email them. And then they don't respond. The CPA does not respond. Or they're just afraid to reach out because the price is so wonky and they don't understand, well, am I going to get billed for this, or how does this pricing work? So for strategy, we do a quarterly if depending on the size of portfolio you are. So we do some sort of value-based pricing, either quarterly meetings, with email access, of course, tax prep just depends on the number of legal entities. But I don't want to limit access to me and my team, my clients. I want them to reach out so they're asking questions ahead of doing the transactions that they're doing, as opposed to coming to me next year and say, "Oh, actually, we sold 5 deals, like, talk about this," you know? So you truly get more of an advisor who is on your team, who you're conversing with and making decisions with, as opposed to, "Well, I'm reaching out and they're not reaching back." So a lot of clients feel lost with some of those relationships, either because of volume of clients that, other firms are serving and or the type of client that they're serving. Maybe the bigger ones take more priority over the smaller ones. So, yeah, so my plan with the way our business is growing is to continue serving that mid to small to mid-size investor to get more of the personal touch and, just to be available to answer questions and a little bit more hands-on, primarily because they're just starting out with their investing journey and need a little bit more hand-holding and understanding about, like, how does this really even work. So that's the client I'm serving, and then again, I talked about the value-based billing as opposed to hourly rates.
Yeah, love that. That's so great. I'm gonna go ahead and put Mahak's, website up here. resmartadvisors.com. Love that you have the word advisors in there. That just sets you apart from so many CPAs and tax professionals. So I'm going to leave that up. Go ahead to that website, schedule with her. You can reach out, contact her. Love that you made it so simple to contact you on your website there. That's part of why I made sure to have that ready to show. But the whole idea of empowering people, teaching them not just here's your numbers, but here's how you understand your numbers. Here's how you can think about when you're making the next decision, the key questions to ask to not just think about taxes, but also profitability and stuff like that. So many CPAs just do the work and don't talk people through it or explain, here's the why behind it. I think that's a really big value. And I hope you're charging really well for it because that's worth paying a lot for. As a
Yeah.
CFP certified financial planner, I know how important having a tax professional that knows what they're doing and doesn't talk above people's heads, but brings their heart and the empathy in there, that is worth a ton. So thank you for bringing that to your clients, and thanks for sharing all that you've shared today. Is there anything else you wanted to make sure to share with the listeners here before we say adieu?
Well, the best way to get in touch with me is just that contact page on the website. You'll receive a calendar link just for a free consult, an initial call. This allows us to assess your tax and accounting needs because, a lot of smaller business owners may not have their books really in a good place either. So we do support that side of your business. Just have it all kind of ties together, right? So the tax is just one piece of it. It's reporting on, what happened last year. Whereas with current bookkeeping and more, CFO services or even just cash flow management, I want to arm you to be able to make wise business decisions on current data. So really have a heart for, of course, accounting, it's just, end-to-end accounting. But oftentimes when you have delayed books, you just can't make good business decisions because you would never do that with deal flow. You would always have, you would always pay for good data on the market today.
Yeah, you get
But
the
then when it comes
appraisal
to your finances,
today,
you let it
not
fall
from
behind.
3 years ago. Yeah.
But then times with bookkeeping, reconciling your books, it falls behind, and it's almost looked at as like, oh, tax time is 6 months away. Whereas what I'm saying is you need to know your margins today to be able to make wise choices in your business. So really, it marries the cash flow, with some of the tax planning. Of course, accounting is right at the crux of everything. So I think you get a different experience with my firm, primarily because I'm not only thinking as a CPA but from a tax standpoint, but also helping empower folks really run their businesses in the most efficient way that they can and with that financial clarity. So you get sort of a well-rounded package with us, as opposed to just, oh, go talk to this person here, the keeper, go talk to the CPA over here. Your team isn't so disconnected. It's all sort of in one place, which, there's synergies in that and some value in the time that doesn't get lost communicating between parties.
Yeah, love that. Thank you so much. And we didn't even touch the tip of the iceberg with bookkeeping and data today. So we'll have to have you back on in the future to talk more about that because that's sometimes for most people the scariest part. Making sure it's tracked correctly, the fraud or the different things that can happen there and making sure that's not going to happen. So we'll have to have you back on in the future to talk about that. For now, I'll put that website back up. If you didn't get a chance to go there before, we'll also put it in the description below so that you can click straight to Mehak's website, resmartadvisors.com. Thanks so much for joining us today. I hope a lot of people reach out to you and that you find a good fit with folks who are looking not just for someone to tell them what to do, but help them decide what to do, which is what we're all about here at Wealth Wisdom Financial as well. Thank you so much, and we'll
Well,
talk
thanks for
again
having
soon.
me. Bye.
Bye.